Welcome, my name is Jeff Driver, General Manager Business Development and Investor Relations for AMCIL Limited. I have with me today Mark Freeman, who's the CEO and also the Portfolio Manager for AMCIL. So Mark, we've just announced our half-year results for the financial year. Perhaps you could just take us through some of the key financial highlights of the result.
Okay, thanks Jeff. I'll just touch on the highlights and then we can get in and talk about the portfolio performance and perhaps some of the transactions we've been doing. Half-year profit after tax was $3.6 million, down 12.6% from the previous corresponding period. This decline was primarily because of lower levels of activity in the trading and options portfolio. Directors have declared an interim dividend of 1 cent per share, fully franked, the same as last year. The annualised management expense ratio of the company is 0.53%, which is low for this type of fund. The portfolio size increased to $423 million given the strong performance of the portfolio over the year.
So Mark, you touched a little bit on the portfolio performance. Perhaps you could talk about it and also sort of what were the key drivers of the portfolio performance over the period.
Thanks. Well, I'll start with the performance numbers. AMCIL's 6-month portfolio performance to the 31st of December was 8.7% when you include franking credits, and from the index it was 7.6%. And if you look across a 12-month period, AMCIL's return was 17.3%, including franking, whereas the index was 12.7%. And importantly, when you look at the longer-term returns, say 5, 10, 15 years, AMCIL continues that trend of outperformance. Over the 6-month period, the portfolio benefited from the broadening of holdings over the year, with strong relative performance compared to the index coming from newer holdings such as Sigma, which I'll touch on shortly, Redox, Technology One and Block. Longer-term holdings such as Netwealth and ResMed also performed very strongly over the period.
Thanks, Mark. You talked about the strong portfolio performance. I guess one of the features has been the fact that we actually don't have a very strong position in the banks, which were very strong over the period. Perhaps you could just talk us through that a little bit?
Yeah, I guess our strong underweight period dragged in a relative sense, but what we were able to do is make it up in other parts of the portfolio. And actually during the period, we have exited our CBA position. We had a smaller position there, and we've also been reducing our Westpac and NAB because we think the valuations are really extreme at this point. So we've still got a very small amount in NAB and Westpac left, but it's a very underweight position.
And I suppose that's the advantage of a portfolio like AMCIL, where because it's a very focused portfolio and we're trying to have a sort of a weighting of stocks which aren't sort of overweight too much to each other in terms of the portfolio, we can have positions where you have smaller stocks actually can benefit and provide strong returns to the portfolio.
Well, that's right. We're sort of not trying to be driven by index weightings. Yeah. We do like some of the larger companies. For example, we've had stocks like Wesfarmers and CSL for a while, but we tend to spread our holdings and happy to have just as much in a mid or small cap as those if we feel that that's appropriate.
In terms of the activity over this last 6 to 12 months, I mean, what were sort of the key sort of changes you made? You talked about the banks, you obviously sold some of those off, but what else has sort of happened?
We've got a set of frameworks that we've talked about previously. If you think of some of the larger investments, as most people who watch these would know, we like founder-led companies that have got strong market positions, strong growth prospects, and have proven their ability to run a company. And so we took a reasonable position in Sigma at attractive prices, and with the ACCC approving the merger with Chemist Warehouse, that stock has gone up a lot. So Chemist Warehouse is really what it's about. It's that founder-led company. It's a category killer, lots of growth left. So it ticks all our boxes that we like. So a key part of investing is to get early into a story. So we've taken that position there, which has been very good. We saw an opportunity in WiseTech. There was some weakness there. There were some issues with the company, but we think the company is still in a very strong position, and we used that weakness to increase our holding. We also topped up our ARB. We like the quality long-term stocks, but we still look for value elsewhere in the market. So we thought the deal that AMCIL did with Berry is now going to give them earnings growth for the next few years, and that's what we want to be, is investing in companies that are going to produce that growth. So with that change and the valuation being very low, we took a position there. We've taken a position in EVT, which is another sort of that founder-led culture. We deem that more of an asset play. We think it's fundamentally undervalued. But we also took a smaller position in Region Group, more for the yield. It's got a yield of over 6.5%. It's had some headwinds due to rising interest rates, but we think that's probably played out a bit now and it should go back to some growth. So that combined with that yield, well, we think that's better than cash at this point. So we do tend to look across different areas of the market to try and find pockets of value, but our bias still is with the quality companies with structural long-term stories to them.
And we're very much, as you just described, a bottom-up investor. But in terms of sort of the outlook for the market over the next 6 to 12 months, I mean, what are you seeing there, particularly from an AMCIL perspective?
Yeah, look, I mean, broadly we're pretty cautious. There's lots of areas of the market, banks and other areas really that have, when you look at the PEs now, they're very high compared to historical levels. With AMCIL, we can look across the market and, I probably would have made similar comments last year, but we've able to find good stocks. Technology one went into the portfolio, that's been fantastic. I think Redox is another one we've touched on before, which is a founder-led business, and we've done well out of those. So opportunities always come up, but you've got to be on the hunt for them. And I'm sure this year will be no different, a bit patient at this point, but opportunities will come through that will align with our frameworks, and the key for us is to act when we see those opportunities.
All right, thanks Mark, and thanks for your time.
Okay, thanks Jeff.